Have you ever looked at a stock price at rupees 5 and thought this could make me rich? Penny stocks seem like the perfect shortcut to wealth. But what if I told you that might be the quickest way to lose your hard earned money? Stop before you invest. In this video, I am going to uncover the truth about penny stocks, what attracts investor, the hidden dangers and real life scams you must know to protect yourself. What are penny stocks? The stock price under 50, usually the stock price in between 1 rupees to 50 rupees or in between 1 rupees to 100 rupees. And the second is low market capitalization. So whenever we see the market capitalization is less than 500, it means that stock may be penny stocks. Why are penny stocks attractive? Low price, easy entry for small investor. A small investor, if they want to invest 10,000, okay, so they search 10 rupees of share, okay, and they think that I will get 1,000 share, 1,000 number of share of that company, because the share price is only 10 rupees. And if I invest in that company, the share price of that company is if 1,000 rupees, then I will get only 10 share. So this is the attraction point. Second is high potential return. There are huge percentage gain possible. People usually think that uh, price is already less, only 5 rupees. So there is huge chance to get more return. If the share price will become 500, then I will get 100x return within short time period. Excitement factor, quick gain, lure investors, and FOMO, fear of missing out. Success stories spread fast. Whenever we see some success story in social media or somewhere that I made 10x return in this penny stock, so we usually jump that company. So these are the attraction point. The risk of penny stocks. High volatility, price fluctuate in penny stocks. Usually, price fluctuate, and low liquidity. Number of outstanding shares are very less, so it is very difficult to buy and sell the share frequently. Lack of information, and fourth is fraud risk, prone to scam like pump and dump scheme. How to identify penny stocks trap? Unrealistic promise, guaranteed to triple in a week. Wherever you see the guarantee word, not only in penny stocks, even in a blue chip company, in large cap, if you see a guarantee word, it means this is trap. So in a stock market, no one can use guarantee word. There is no guarantee. Sudden price spikes, watch for pump and dump patterns. So in penny stocks, some person, some fraud, there is chance of fraud, and what they do, they usually buy biggest quantity of the particular share. Obviously, the share price will grow because there is huge demand. So this is called pump and dump pattern. Poor fundamental, usually penny stocks, poor fundamental, and unverified tips. We should avoid we should avoid untrustworthy sources. Example of traps. Stock A, For example, rose 200% in only 3 days, then fell 90%. Second is promoted as the next big thing, now delisted. So you can understand from this two example. And the lesson is past performance is not always equal to future success. And just I'm going to a screener website, Premier Limited and Alok Industry. We see Premier Industry and Premier Limited and Alok Industry. This is the chart of Alok Industry. Okay. And when we see the Alok Industry in screener.in, market cap is okay, but book value is minus 40. ROC minus 4% and there is no ROE. Sales growth minus 24%. Profit growth is also in minus, negative. Interest coverage is also negative. Sales growth 7 years minus 6. Profit and loss statement, you can see here, operating profit trailing 12 months minus 62 crore and net profit March 2024 net profit minus 847 crore. Balance sheet, this is the balance sheet of Alok Industry and reserve you can see here, reserve minus 20,744 crore and borrowing is also increasing. So you can understand the company is fundamentally very big. Now jump to another company, Premier Limited. Premier Limited. Market cap is only 10 crore and book value minus 110. ROE, ROC, nothing is here. Sales growth is also not showing. Debt to equity also not showing. Interest coverage ratio minus 4. Profit and loss statement, you can see here net profit minus 10 crore. See the balance sheet. Balance sheet reserve minus 364 crore. Borrowing is also 177 crore. See the chart of Premier Limited. Premier Limited chart. You can see it is share price is decreasing. Okay. Now moving to next point. Can penny stocks ever be good? Deep research is must. If you really want to buy the penny stock, you go and do fundamental analysis. Deep research is required. Look for credible management and solid business model. Third is be prepared to lose your investment. And fourth, never invest more than you can afford to lose. Point 7, conclusion. So are penny stocks a trap? Yes, penny stock is really a trap. So according to me, we should not buy penny stocks. There are so many good companies are available. Approximately 5,000 listed company. Out of 5,000, if you search more than 500 companies, you will get that are fundamentally strong. So if fundamentally strong companies are available, then there is no reason to buy penny stock. Remember, there are no shortcut to wealth. Moving to next point. This is call to action point. So investing is all about making informed decision, and penny stocks can seem tempting, but they are not always what they appear to be. So before you dive in, always research thoroughly and prioritize safety over shortcut. If you found value in this video, give it a thumbs up. Subscribe for more financial education and hit the bell icon to stay updated. Let's work together towards smart investing and achieving financial freedom. Thanks for watching and see you in the next video.